Tesla and top China automakers are pumping the brakes on the ongoing price war that shook the space this year. Companies like BYD and Xpeng joined the Elon Musk-run company in signing a pledge to regulate EV pricing in the country after calls for a crackdown. So does this signal an official end to China's pricing wars? Michelle Krebs, Cox Automotive executive analyst, joins us now. So does it, from your view, Michelle?
I think the jury's still out on that. It's not clear how binding this is, and it's a very competitive market. The Chinese market is the biggest EV market in the world, and everybody wants their piece of it.
Right. And so now that we kind of think about how these competitors are going to go after a consumer and trying to make sure that their EV is perhaps the most adaptable to in the changeover for some of those drivers out there from a combustion engine to an EV. How has the infrastructure messaging moved forward in a region like China versus what we've seen in other parts of the world?
Well, the Chinese government has really made shift the transition to EVs much more. They're pushing it a lot more than we have been. Mm-hmm. The U.S. is just getting on board with that. We've been a little behind. Europe is pushing it as well, but China by far is the lead. So there is a big push on every aspect of moving to EVs.
Michelle, let's talk about EV expectations for domestically. What's your expectation for this year?
We believe that this will be the first year that electric vehicles hit 1 million units. We were at about 800,000 a year ago, and we think we'll surpass that 1 million mark, and we're on track to do so.
And then additionally, when you think about beyond new vehicles, some of the existing vehicles that perhaps will make their way into the circular part of the economy, which is really just resale or used vehicles at that point. Are we seeing any pickup among used EVs right now?
We're starting to see some of that build. We haven't been selling EVs all that long, and what was out there was mostly Teslas. But we are starting to see some inventory build for used vehicles, and that should be a good market for people who want an affordable way to get into the EV market, because new EVs are pretty expensive at the moment.
Speaking of affordability has been an issue when you're talking about new vehicle sales. The prices continue to just remain elevated. What's your expectation, your forecast for this year for new vehicle sales in total?
We're a little bit more cautious than others. We had a very robust first half, surprised us, and so we upped our forecast. We expect 15 million vehicle sales this year. That's about 1 million more than last year. But the market was running hotter than that in the first half. We just think that we need to be a little bit cautious about the second half. We know that there's going to be another interest rate increase and possibly two. And there's already been a lot of pent-up demand unleashed, and we just wonder how much more of that is there. We've seen that on the retail level, and we've seen that on the fleet level. So we're just being a little bit more cautious about how the second half will go. We're also facing a possible strike by the UAW as they negotiate a new contract with Ford, GM, and Stellantis.
For GM, since you just mentioned them, we got their second quarter figures and 691,978 total vehicles sold, and 15,000 of those EVs right now, about 15.6 thousand of those being EVs. At what point in this broader kind of EV war do you foresee there being a real competition from some of the legacy U.S. automakers like a Ford, like a GM, and competing with the output, the production and the deliveries that Tesla is seeing, even though not all of those necessarily are based on new purchases, given that they're getting through a backlog in some cases?
Well, we think the pie is going to grow bigger, and that these legacy players, as well as some of the newcomers, will take a bigger share of that. We already have seen that Tesla's market share will come down. They're still dominating in the market. They're still number one in EV sales in the U.S. and luxury sales, for that matter. So they will still dominate, but they will have more competition from. We'll see others taking pieces of that pie.
All right, Michelle Krebs, we put a pin in our conversation there. We appreciate both your forecast for the year and insight on the EV space. Cox Automotive Executive Analyst. Michelle, thank you.
Thank you.